With this, let's also move on and let's connect with our expert then and try to understand that how is he looking at the markets right now, as well as what's his sense that where are markets headed from these levels. Let me welcome Dharmesh Shah, Head Technical at ICICI Direct. Hi Dharmesh, very good afternoon and thank you so much for your time. First of all, Dharmesh, great recovery for the benchmark indices. Were you expecting one, as well as in the second half, how the trading can pan out?
Yeah, good afternoon. Yes, definitely. It's been a very great day for the market. We have seen a good recovery from the 50-day EMA, which was around 25,090. Going forward, yes, it looks like I think so. The market was into the oversold territory and it was expecting some bit of a recovery, but was not expected in today's trading session. But however, the recovery seems to be very sharp. We expect this recovery to continue towards the target of around 25,500 to 25,600 should be the initial first target for the Nifty. But if you look at I would like to share with you some of the historical data. In calendar year 2024, there has been the 6 instances of corrections in the Nifty, where the average corrections have been pan off in around 5 to 6%. And the trading sessions are around 5 to 6 trading sessions where the Nifty correct 5 to 6%. And most of the time, it takes the support around the 50-day EMA. In the current context, also, if you look at the Nifty making high of around 26,300, and we are already corrected 4.5% from the high, and almost 5 to 6 trading sessions done. We believe, I think so, price wise as well as time wise, Nifty seems to be finding support at 50-day EMA since calendar year 2024. We expect this support to hold even eventually if it breaks. It looks nothing negative from the current levels. Yes, maybe I think so 100, 200 points cannot be ruled out in terms of panic. But eventually we expect Nifty to see a sharp recovery towards 25,600 to 25,700 in the coming trading session. So by the dips, it looks like most of this negative news like geopolitical tensions, or you have even next week of state elections coming out. So it looks like most of this negative news seems to be getting priced in this current corrective phase. So yes, buy the dip should be the strategy, with 24,800 is likely a strong support for the Nifty.
Buy on dips should be the strategy, given the fact that we will likely see more stellar recovery come at play for the markets. Right now, the recovery is in excess of about 300 points on an intraday basis when you're talking about Nifty. Dharmesh, good afternoon. This is Cheryl also joining in the conversation. I wanted to understand, you've said a buy on dip strategy would be great, but any sector-specific moves that you are seeing, any sectors that you're liking at this point in time, which is looking good? Because we've seen a lot of sector rotation at play of late.
Yeah, in this current corrective phase, if you look, I think so metal as a sector seems to be relatively outperforming. I think so. We have hardly seen any correction in metal space. So yes, again, as China stimulus package and if the way the dollar index seems to be panning out, it looks like it's not the day far where we see a breakdown below 100. So yes, overall, I think so metal as a space looks positive, where stocks like JSW Steel, SAIL, Tata Steel, Jindal Steel and Power. I think so. These are the stocks where we believe. I think so. One should definitely see a recovery in the coming days, and we should see 5 to 10% upside in most of the stocks. Apart from that, again, banking as a sector, we still believe. I think so. The rally which started from 49,000 to 54,000. What we see currently is nothing but the retracement of this rally. We believe 51,400 to 51,000 should be the strong support for Bank Nifty, and we should see a gradual recovery for Bank Nifty too. So banking, metals, power space as a whole looks positive from the current levels.
Right, but Dharmesh, within banking as well, would you now bet for PSU banks versus the private banks names? Because though we have the data coming in from BOB as well as HDFC Bank as well, but it's BOB that is one of the top gainers is FNO today. So how are you sensing the move in the banking space and any of your top bets from the space as well?
Yes, again, I would like to highlight the bigger picture. I think so. If you look at the bank, PSU bank Nifty chart, it has witnessed a decadal breakout PSU bank index, and what we see currently is nothing but the retesting of the previous breakout levels. So we believe, I think so, PSU bank Nifty looks, I think so, the risk reward, I would say, it's much favorable at the current levels for PSU banks, because the sector has done nothing for last 6 months. It has been into the corrective phase. We believe, I think so, things are getting better for PSU banks. The risk reward looks more favorable from the current levels. At the current market price, we believe, I think so, Union Bank of India, State Bank of India, and even Bank of Baroda, I think so, these are looking more lucrative from the current levels. we should see a gradual recovery for 5 to 10% for most of these PSU banks. Apart from that, again, in the private banks, stocks like Indices Bank, again, the stock seems to be finding a supported 50-day EMA. And the way the chart technical setup seems to be forming out on the monthly chart, it looks like, I think so, things are looks more positive for Indices Bank for a target of around 1580 to 1600 in the coming 2 months. So yes, Indices Bank, State Bank, Union Bank, Canara Bank, Bank of Baroda. These are the banks I think so one should definitely look out from the medium term perspective.
All right, so that's the take coming in on the banking pack. Which side of the fence looks good? But what is your take coming in actually primarily for the metal sector as a whole, Dharmesh? Because you've seen a lot of global cues actually lending their support to the metal space back home. But what's your take coming in on the metal sector? And are you, which side are you preferring, the ferrous or the non-ferrous?
I think so. We believe, I think so, both of them should do good. I think so, because as a sector, they have done nothing. But yes, stocks like coming like aluminium, if you look individual charts of aluminium, particular in terms of commodity, it seems on the monthly chart, the strong base formation, higher formation on the aluminum chart. So clearly indicating, I think so, aluminum as a space looks positive, where stocks like Nalco, Hindalco are the ones where definitely one should look out for in the medium term perspective. Nalco, one can definitely look for a target from 245 to 250. And in terms of Hindalco, again, clearly relatively outperformance, I think so. If you look at the longer term picture for Hindalco, it looks like a target of around 810 to 820 for Hindalco. So Hindalco, Nalco are the ones on the aluminum space. It looks positive. Apart from that, steel side, again coming to particular steel, again the sector where the stocks have done that for a long time, but stocks like JSW Steel, I think so, clearly outperforming in terms of relative outperformance. We believe JSW Steel is one stocks where we should see a target of around 1130 to 1140 in the coming days. So JSW Steel sale, which is again an oversold, I would say, where we can see a short covering happening for Steel Authority of India. One can look for a target of around 145 to 146. So across, I would say, metal space as a whole looks lucrative from the current level.
All right, metal space as a whole looks very lucrative to Dharmesh at this point in time. But Dharmesh, also share your take on the IT space, because what we are seeing is that a good rebound, and just in a couple of weeks we'll start talking about the earnings as well. But before that, it's like IT as a whole and index level is trading at the day's highest point and a good recovery. So, what's your take on the IT space, and which one will be your top bets in the same?
I think so. The sector has done nothing for last 2 years, and after a long corrective phase, I think so. The sector seems to be relatively outperforming. Yes, currently we have seen some bit of a profit booking happening in TCS from after making a high of around 45.50. But yes, as you said, that the results still coming in from the next week. I think so. More important is the commentary. I think so. How they go forward, the way the US seems to be. The way the interest rate cycle seems to be picking out in US, it looks like, I think so, overall things looks positive for IT space. Coming technically, again, we believe, I think so, TCS, Infosys, other space, I think so, we should focus more towards the large caps, I would say, where stocks like TCS, Infosys, Wipro, HCL Tech are the ones one should definitely look out for. And particularly to Infosys, I would say that yes, definitely the stock has been relatively outperforming, and a multi-year breakout seems to be panning out for Infosys. So yes, Infosys is the one stock where we could see a sharp recovery. I would say a new high is likely for Infosys. Look for a target of around 2100 for Infosys, keeping a stop loss of 1765. So Infosys, HCL Tech, TCS, Wipro, I think so most of them should look positive. But my advice, I think so, one should definitely take a call post results, because more important will be the commentary. I think so, how the commentary pan out for individual stocks of post results. So one should definitely take a call post results.
All right, take a call post results, especially when it comes to these IT majors. And talking about results, come next week, we will be bombarded with all the Q2 earnings. But thank you so much, Dharmesh, for joining us on the show and giving us your take on the markets, the sectors, and also sharing your top picks among those sectors. Thank you so much once again for joining us on ET Now. But let's move on.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.